Hi guys, welcome back and let's continue our Forex technical analysis for swing trading. Today is Tuesday, August 19th. Okay, as we guys know, let's start with the USD index chart. Here we have the majority of the market is behaving above the yellow moving average line, right? That means overall trend is up and USD is strong. We're gonna look for opportunities to buy USD. So currently market is up, retracement, and lots of candles hanging out below the yellow moving average line. But it is still considered a fake out because the size of this breakthrough is not that significant. It has to be at least a 50% of the last leg to be considered trend reversal. But right now it is less than 50%. That's why it is still considered the fake out. So one thing I want to mention is that when the price action is hanging out very closely to yellow moving average line, that means overall the trend is still up, but trend is weak. It's not really a strong trend. In other words, next several days market could be hanging out near the yellow moving average line eventually, but eventually it should return into original trend and continue to go up. But still, technically speaking, trend is still up and it's good to look for opportunities to buy USD. Okay, given that, let's continue and let's write it down. Today is Tuesday, USD index chart. Currently trend is up, doing fake out, and our decision is still look for opportunities to buy USD. Okay, now let's analyze the Forex pair. Use USD Japan Yen. So here we have not this one. So here we have up leg, retracement, up leg. Market currently doing a lot of retracement with the fake out. Once again, the market is hanging out very closely to the yellow moving average line. That is a sign of a weak trend. So eventually, I wouldn't be surprised if the market continues to behave like this next few weeks. So, but eventually, it should still return into original trend and continue to go up. So I will leave the decision up to you guys. So if you guys need to trade a currency pair right now, I would recommend buying USD Japan Yen right now because it's at the 40%, 60% retracement level, right? So that is a really good zone to trade. But I wouldn't expect the market to return into original trend very soon. But I will leave the judgment up to you. If you guys still have existing buy positions on USD Japan Yen, that is also good. Just keep the stop loss below the local minimum here and keep your take profit at the Fibonacci extension 1.618 up there. So right now, even though like a trend is weak right now, market could still be hanging out like this, but sooner or later it should return into original trend and hit some Fibonacci extension. Alright guys, I will leave the judgment totally up to you guys. Okay, so let's write it down. USD Japan Yen, trend is up, currently doing the fake out, leg size is okay, and it would be good to buy USD Japan Yen right now because it's at the 60% retracement. But currently I don't have any additional position to risk because all of my positions on Euro USD buying USD. Alright guys, and compared to other charts, USD Japan Japan yen looks best, guys. Let's write it down, and I will go over other forex pairs right now. Okay, let's analyze USD Canada dollar loonie. So here we have market consistently behaving above the blue moving average line, yellow moving average line. That means overall trend is up. USD is getting stronger against the Canada dollar, right? So we have up leg. Now market seems to be retracing. If the market still retraces once more into good zone, at least the 50% zone here, then it would be a perfect opportunity to buy USD again. So right now it's better to wait because market is not retraced into a good zone, but still trend is considered up. So once again, notice that a few days ago, market has been, behaving very closely to yellow moving average line. Once again, it is the sign of a weak trend. Even though trend is up, market is behaving closely to yellow moving average line. So that's a sign of a weak trend. So I wouldn't be surprised if the market retraces back again like this next few weeks. I wouldn't be surprised. So anyway, so trend is still up at this point, but trend is considered the weak. So we're gonna follow our decision rule, and we're not gonna touch USD Canada dollar because it's not retraced into a good zone. Okay, let's write it down. USD Canada dollar trend is up, leg size is nice, and our decision is to wait 50% retracement. Okay, USD Schweizer franc. So here we have up leg retracement, up leg. Now market seems to be retracing right now. So market is currently retraced about the 40% of the last leg. If the market retraces at least the 50% zone here, then it would be a good opportunity to buy USD Schweizer franc. So until that, we're gonna wait. And once again, notice in this area, guys, you see price is behaving very closely to the yellow moving average line. That is a sign of weak trend. Okay, so let's write it down. Let's write it down. USD Schweizer franc trend is up. The size is nice, and our decision is to wait 50% retracement. Okay, pound USD. So here we have down leg retracement, down leg. The market seems to be retracing once again, right? But unfortunately, if the trend was still down, these resistance level should have held, right? But unfortunately, this resistance level is touched upward, and that is very likely that trend reverses. But our rule states that for the trend reversal happen, at least the 50% of the last leg has to be on the reversal side, right? So in this, sometimes you will come across those kind of tricky situations, and at this point, it's better to wait until you get a clear signal. So I wouldn't touch pound USD. Based on my rules of trading system, pound USD is at this point the 50-50. I don't know if the trend is reversed or not, so that's why I'm not gonna touch pound USD. So let's write it down. So technically speaking, trend is still considered down according to my trading system doing the fake out. But if the trend was still down, that resistance level here should have held, right? But it is not broken up, but it is touched up, and which is very unlikely. That's why it's like I give it a 50% retracement. Okay, so that's why we're not gonna touch pound USD. So don't trade pound USD, guys. We don't have clear signal on pound USD. Okay, Euro USD. So here we have Euro USD, down leg, retracement, down leg. Now market is retracing and market is currently doing the fake out, right? And majority of the meat of the candle is below the yellow moving average line. That means the trend is down and USD is getting stronger against Euro. And reading that situation right, and when the market retraced about the 50% zone here, and I bought USD against Euro, which was the perfect execution of my trading system. I set my stop loss here. I set my take profit Fibonacci extension 1.618 down here, and market should sooner or later return into original trend and hit some Fibonacci extension. And once again, notice guys, here the market is behaving very closely to yellow moving average line. So that is a sign of the weak trend again. So anyway, I still have a buy position, sell position on Euro USD, which is a perfect execution, and I just need to keep my position open and let the market hit some Fibonacci extension down here. And my intuition is that market is most likely to Fibonacci extension 4.2 here and then retrace once more, I think, because it's also possible that market is oscillating back and forth, back and forth the yellow moving average line, right? So imagine next few weeks market behaves like this and return into original trend like this. So what does it mean? We have a lot of up candle, down, down, up, down, up, down, right? It would be oscillating back and forth the yellow moving average line. That is an indication of the sideways action. So I will update my take profit into Fibonacci extension 4.2 there, and originally it was up here, but situations have changed. Once I see the potential of the sideways action, I have to update my take profit into most realistic take profit. So that's why I moved my take profit into this level, Fibonacci extension 4.2. So anyway, so I still have sell positions on Euro USD, which is a perfect execution of my trading system, and let it accumulate profit. Okay, so let's write it down. Euro USD trend is down. Currently market is doing the fake up. Leg size is nice, and I risked about 0.7% of my account at the 50% retracement, which is perfect execution, and let's let it accumulate some profit. Okay, Aussie. So here Aussie. So here majority of the candles hanging out below the yellow moving average line. Trend is up, trend is down, and USD is getting stronger against Aussie, right? So we have down leg retracement. Now market seems to be retracing into original trend. If somehow market retraces back into original trend and reaches about 50 to 60% zone here, 50 to 60% zone here, that would be a perfect opportunity to sell Aussie. So until that, we're gonna wait. So the train has already started moving. So if you're trying to sell Aussie right now, it's too late, guys. Market is here, which is not a good zone to trade. Let it wait until at least the 50 zone retracement up here, then sell Aussie. Okay, until that, wait. Okay, let's write it down. Aussie trend is down, leg size is nice, and our decision is to wait 50% retracement. Okay, New Zealand dollar USD. Again, the same story. So we have nice down leg retracement, down leg retracement. And if you guys have been following my videos, when the market retraced about the 50 to 60% zone here, I said that's a really good zone to sell New Zealand dollar USD. Since then, market is returning into original trend, and soon it should return into Fibonacci extension. Fibonacci extension down there. So it's very likely the market will reach Fibonacci extension 1.618 down here. So right now it's too late to sell New Zealand dollar USD because market is not in a good zone. If somehow market retraces once more and reaches into 50 to 60% zone here, then it would be a good opportunity to sell New Zealand dollar USD. Until that, we're gonna wait. So once again, I didn't trade when market retraces 50% zone here because I have traded all of my available positions on Euro USD. Alright guys, thank you guys watching. See you guys next time.